Hey everyone, this is Heather here again, and this is another video in our mini series on how to use Scany to find really good swing trading setups. So today we are going to go over this relative strength scanner, which is just which shows you the relative strength of the stock as compared to the underlying market indices such as SPY, QQQ, IWM. So this is a really powerful filter or signal, and I use it quite often especially when we are in a choppy market, because what this is telling you is it's giving you all the stocks that are performing way better than the market right now. And when we are in a choppy market, or let's say when we are in a downtrend, we want stocks and we want leaders, because those leaders are the ones that are going to outperform the market, and then the rest of the market catches up. So you always want to find leaders in any kind of market, and this signal is what gives you the leaders. So let's say on April 1, let's say how the market was. So if you look at SPY, the market was probably going up. So market is already going up. So anything that we are going to get here is actually going to be better than the market. So let's look at something where we are all familiar with. We have AMAT and we have AMC here as well. AMC is crazy. So let's look at AMAT. We can see that there is a reason that this was given there. So this had a really good strength. You can see that this is going at a much higher slope than the market. Let's see. Than the market. This slope is slightly lower than how this is going up. Now, how do you enter and exit when the relative strength is high? When the relative strength is high, you can't just enter when you see this relative strength indicator. It's slightly different in terms of entries and exits. Whenever the relative strength is higher, you always want to wait for a pullback, because the stock is doing so good in terms of the as comparison to the market. When it pulls back to any support or towards its moving averages, then it's going to rally again, because it has been beating the market quite consistently. So the expectation is that it is going to beat the market again. So we can see that it's going up quite nicely here, which is why it's again beating the market. But here, let's see, actually here, April 1st, we are quite far from the 20 and 50 moving averages. And please remember this rule, especially if you're a new trader. Do not go into a stock if the distance between the 20 moving average and the price is very large. If it's slightly smaller, then sure, you can enter, but the best entries are either on the 20 moving average, or even on the 9 moving average, or on the 50 moving average, especially when we are in a very good up or down trend. So you shouldn't enter, like there is no way you should ever enter here. It just doesn't make sense. We had a breakout here. As you can see, we had a resistance level which we broke here. So this might have been a good entry, because again we had the 20 moving average right below this price, so this would have been okay. But this is just too overextended, so no way we are going to enter here. But since we know that this stock has high relative strength, we are going to set up an alert for whenever the price falls on the either this 20 moving average, or let's say this support region again, which is almost also the 50 moving average. So once that happens, we are going to get in. So let's say we want to buy 2 call contracts, or we want to buy 100 shares. We are going to buy the first 100 shares here, and then let's say we probably want to buy we probably want to buy 50 shares here, and let's say the remaining 50 here. So that's going to be our entry, and our exit is going to be like completely arbitrary. You can exit at your preferred profit potentials. The expectation again with these stocks is that they're going to move up really well, so you'll always have some really good profits. But please know that there are no direct entries given as soon as you see this. It just tells you that this is a really high relative strength stock, and those work really well. Let's see, we have AMC. So I'm not sure what was happening with AMC at that time. It's just weird, but still I think when it goes up by such a large amount that the formula thinks that the relative strength is quite high. Let's see, this was April 1. Again, there is no setup here. Like maybe there is a setup because we are right between the 20 and 50 moving average. Maybe there is a setup when we touch the 50 moving average here. Maybe you could have entered here, and then that would have been awesome. But again, just looking at this, it doesn't look like it's in a very clear, beautiful uptrend. So you can probably skip these stocks, but still we can see that we have a beautiful resistance here. So since you always want to wait for signals for these types of stocks, here is a signal that you could have followed. You can see how beautifully we respected it here, then here, and then here as well. So I think even right now this might be a good entry. Let's look at something else. Box, can, car. Let's see. Let us see DBX. I believe DBX was doing really well last month. Alright, you can see, I think. So in the last few days, let's say from November 2020 till right now, you can see it has gone up quite nicely. So very nice trend line right here, right? So that's why you're seeing high relative strength. So I think even when the market was choppy, this was working pretty well. I think I actually had a position here as well. And you can see, I need to zoom this out. You can see how beautiful the current price level is. We are right at, so we have this long-term support. Now this is really beautiful chart. Then we have this resistance which we finally broke here, but since this was March 12, we couldn't have entered. But I'm sure this was there in March as well in the relative strength scanner. And then we can see we fall. So this would be your entry. But again, we are actually here right now. But this was there as previously as well. So this would be your entry. Then you go back. This would be your entry. Then you go back, you're not going to exit because you are still respecting this moving average. And then we have one entry here and one entry here. Hopefully we stay above the support level so that we can continue going up. So again, this hasn't panned yet, but still this looks so beautiful. You can see first support, then we have a trend line support, but that requires the price to go just a little bit down. But then we have these actual 1 2 3 4 times this has acted as support, and we also have the 50 moving average support. So this seems like a really good swing setup right now. Let's do one more because I really like this. Oh, we have GME as well. I saw GME somewhere. Oh, okay, we have GME. Let's go over how we could have gone into GME. So here, so as you can see, the price had moved so much. Like it went from, let's say, about 44 to 260, 348. That's why the formula thinks that the price action of GME was way better than the price action of SPY in terms of percentage gains, because its relative strength, the strength in GME was way too high. And we can see that we were told about this here. So as you can see, this was an okay support level, right? Let's see, right here. So we could have entered, but in just after 2 days we actually broke this level. So this would be our exit, and then we went down and we went close to the anchored VWAP. So right now it doesn't seem like there is any potential here for a good entry. Maybe this trend line, but maybe there isn't something good on the chart, at least for me, in terms of the price action. So we are just going to skip this one as well. I'm going to find something nice because I don't think I'm doing justice to this one, because this one is always used to find the highest gainers. And here you go, I believe. Okay, this we were at here, and obviously you are not going to enter here because there is no setup here. Let's see, we went in and you entered here. Let us see, this is a beautiful. Okay, so we see 1 2 3 4. So the relative strength remains high, let's say, and this is where we enter. You go from, let me show you. If you enter here, we have two types of support levels here. You have, let's say, you enter at 10 and you probably reach about 27. So that's a $17 increase. Obviously, I think you'll probably exit here because again we are now too overextended from the 20 and 50 moving averages. So just start exiting your positions when that happens. The prices never stay above their, let's say, 20 or 9 moving averages for too long. So please remember that. I'm still not finding a really well-known name. So let's see if we have anything here. I saw UPST, so let's look at UPST. UPST, probably this has high relative strength, probably because of how it had behaved in the last few months. You can see it went from here, it went from 25 to 127 to 165. So again, these had really high relative strength, which is why they were moving too much. We are probably looking at the wrong time frame, which is why I think they were now too overextended. So we could not have entered here, because again there is just too much distance between these. So again, this is not a good setup. I'm still trying to, let's give it one more try. Let me see if X is alright. Again X, but you can see X was there. It has moved quite nicely from 16 to, let's say, 26. So $10 increase, that's like 60 to 70% increase, whereas in the same period SPY only increased like 5 or 10% maybe. So that's since there is a formula that tries to find relative strength, this works really well. I've personally used it in a bear market, so that's why I'm a bit biased here, because this worked really well. It's just that we are not able to find a really good setup right now, but still, let me give it one more try. Let's see, buy box or can. Alright, this is good. See, we can see. So when we calculate this formula, we were looking at the price action of from here. So we went from, let's say, about 17 to about 26. So again, that's like a $9 increase, which is again very good. But by the time we are seeing this actually went down afterwards. So again, I'm trying to be realist with these videos, and I'm not trying to cherry pick anything. The demos for this one were not really good, but please believe me that this is a really powerful signal, and you should always try to find some stocks with this scanner, especially if the market is going a little bit down, because you want to find things that are going up despite the market going down. So thank you so much for watching this video. We are going to talk about some other signals in the next video. Goodbye.